You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaeffer, editor and publisher of the Oil and Gas Investments Bulletin. Welcome to the show, Keith.
Good afternoon, Jim.
Well, of all the investments out there, there's some stability in the crude oil market right now.
You know, what a wild ride we've had the last year. We went from $105, $110 last July down to $40 in January. And then like a 50% move is still a big move, even if it's only $20. But, you know, we bounced back up to 60. And it's been really interesting, Jim, that in the last month, 6 weeks, that oil price has been remarkably resilient, with Brent at 65, 66 and WTI at 60, 59. So it's been surprisingly steady. I think a couple of reasons for that are, A, the U.S. dollar has had a big pause. So, you know, the U.S. dollar was rising quite a bit through this oil collapse, and that definitely hurt oil. But for the last month, 6 weeks, the U.S. dollar has been fairly steady, kind of going through a pause in its rise up. So I think that's a big reason. And, Jim, there's just so much money in the world chasing oil right now. It's crazy. And so all these big hedge funds who, you know, make big bets and swings on the oil price, they've just kind of been sitting on their hands waiting for some kind of trend to develop before they act. So I don't know how long it's going to be steady, but it's definitely steady for now.
A lot of analysts were saying that this bounce back probably wouldn't be long-lived and there'd be another dip in the price of crude, but that hasn't happened. Any idea why?
Well, I think demand has been way bigger than anyone expected. You know, depending on which analyst you want to read, we're up anywhere from 300 to 700,000 barrels of demand a day in the States, 250,000 barrels a day in China, well over 100,000 barrels a day in both India and South Korea. So I think that has a big chunk of it, a reason. But also I think the market has been very hesitant to go short oil in the face of such a huge collapse in the U.S. rig count. So I think the Street has some fairly aggressive expectations for how that's going to impact supply. The Street thinks that supply should really start to fall off a cliff, like basically right now. And what's been happening, Jim, the last 2 weeks have been record highs despite all the rig drops. And I mean, it has been a horrific drop. We've probably dropped somewhere between 55 to 60% of all the rigs that we had going last July, and the increase is still happening. The increase in U.S. oil production is still happening. So we're really waiting to see if that, if that is going to end up meaning a drop in U.S. oil production. So far, it hasn't.
Can we expect the Saudis to continue pumping oil at the same rate, or are they going to turn around and start pumping more to bring the price down?
No, I think they're pretty clear that they're just going to keep doing what they do here. In the meetings in Vienna today and yesterday, they're just going to hold it steady. I don't see them increasing any production unless there's a massive uptake in demand. But I'll tell you one thing that's interesting. The Saudis have said no to China. China came back and said, hey, we want a few extra cargoes in the summer, peak driving season. The Saudis said no. We need it ourselves. So they do have an excuse to increase production, again, if they want to, and they've said no. I find that very intriguing.
Does this have to do with what's happening in Yemen right now?
I don't think so, no. It might, but I'd say that's a very low possibility. So, I just think that, they're producing so much now. They might be able to produce more, but I'm just not convinced that they can produce the 12.5 million barrels a day that they say they can. So, and when you're determined to keep prices low and you say no to your biggest customer, I'm not sure that's really a bearish sign. I think that's going to be a pretty bullish sign for oil, that when you got the big dog in the market who wants a lower price, not willing to fill their biggest client's extra demand request to satisfy your own needs, that makes me think that they don't really have as much oil as they think they do.
Can you maybe explain the big gap between crude oil prices and the price at the pump in Vancouver, especially compared to other cities in Canada where I'm told like the prices are 25 cents less?
Yeah, that's very easily explainable, Jim. Two things. One is the 15 or 17 cent a liter.
17.
Is it 17 cents a liter now? Municipal gas tax. So other cities have municipal gas taxes as well, but nowhere near ours. I think Toronto and Montreal are both in like the 3 to 5 cent range. And then the other thing, Jim, is that the whole west coast of North America has a much tighter gasoline market because of the refinery strike and Exxon's Torrance, California refinery having a complete shutdown. So the west coast of the continent is fairly integrated on its refinery side, so we're quite tight.
We'll have more with Keith Schaeffer right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Keith Schaeffer, editor and publisher of the Oil and Gas Investments Bulletin. Is oil going to be one of the hot investments of this year, considering the price is stabilized and you might have a steady income from it?
I wouldn't call oil a hot commodity right now, Jim. You know, there are a lot of people, a lot of really smart people, calling for much higher oil prices later this year. Bernstein, I've seen a few others in the market. But honestly, I'm just willing to wait for now. I'm even though I write an oil and gas publication, I'm quite agnostic on the price. I'm going to move my money around wherever I can make money. So if I think oil's going lower, I'm going to buy refinery stocks. If I think oil's going higher, I'm going to buy producer stocks. And right now, I don't know. I'm not pounding the drum to subscribers or potential subscribers saying, hey, oil's the place to be right now. Nobody knows. And I have rarely seen such a wide gap in guesses between analysts and energy CEOs on where the oil price is going. So nothing's changed in my philosophy since the last time we talked. You only own the leaders, you own small positions, and then we wait to see what happens, and once we got a bit of a trend, we jump on it and increase our positions in the leaders and maybe a couple of the tier 2 stocks. But for now, I'm very happy with not a lot of exposure to oil.
It seems like they're using the coin toss philosophy of investment.
Oh yeah, and I know it's hard particularly for retail investors to stay in cash, but there is a time to do nothing, and now is one of those times. Like I say, we've got some small bets out there, but nothing wrong with a big cash position.
Do you think because we're so used to major changes that people want things to keep moving rapidly, whether it's in one direction or the other?
Oh, Jim, we are addicted to drama as investors. It pains me. So, like I say, there's a time to do nothing. Now is one of those times. We sit, we wait, and hopefully we start to see something happen one way or the other.
I know when we talked before, you said you were surprised that natural gas has done well, but one of the headlines on your website was Texas Natural Gas Massacre. What was that?
Well, one of my guest writers, Bill Powers, does amazing research into natural gas. He's written a book called Cold, Hungry, and in the Dark, and it's all about a coming natural gas crisis, basically saying we're going to run out of natural gas, which is a very out of consensus opinion. So, but Bill's research is pretty hard to refute. You know, basically he said, look, Texas lost 1.5 billion cubic feet a day of production in Q1 15, and that was based on like 650 wells. Well, now Texas only has 320 wells, so you can just imagine what kind of drop we could be seeing there. And so this seemingly never-ending increase in U.S. supply could be peaking out right now. And there's other people starting to say that too. One of my colleagues, Steve Zachris, who runs the Z-Man Energy Brain, he pointed out, in the monthly government statistics, the EIA statistics, the U.S. actually peaked out in their gas production December, January. And those looking back statistics are way more reliable than the weekly numbers we get out of the EIA on Wednesday mornings.
Now, a few years ago, I heard that BC had a 200-year proven reserve. Is that actually true?
Well, you and I won't be around to find that out, I don't think. But
oh, come on.
But I would say we've got a lot of gas. How much gas have we got? I don't know. I would suggest that the shale promoters did a damn fine job in selling us that bill of goods. And I'd say the reality is going to fall quite short of that, but it's still going to be a lot of gas. 200 years would be bit of a stretch. But like I say, what's happening, Jim, is we're just getting better and better. In fact, we've seen a 30% increase in productivity in the last year, just in the last 12 months with this new fracking system, where they can basically pinpoint each frack exactly where they want. They were never able to do that before. They always had to frack 5 or 6 or 10 or 12 holes at a time, and now they're able to do one at a time, know exactly where that frack goes, and then if they can drill the next frack, they can tell right away if they're stealing gas away from the last frack, or if this is okay. If this frack is all on its own. So all of a sudden, the efficiency in gas production is going through the roof. We thought all the big jumps in productivity were over, and now it's just going to be like little small increments here and there, 5%, 3%. But no, we're seeing a 30% jump in 1 year out of new fracking techniques.
All because they're more precise.
Way more. For the first time ever, they can literally tell exactly which frack stage is getting how much production.
And that might also help silence some of the critics, because you don't have to pump in massive amounts of chemicals and water.
No, that doesn't change.
No?
It just means you're never going to overcapitalize a well, i.e. spend too much trying to do the best. You're going to know exactly where the boundary is of these fracks, so you can maximize your recovery of all the gas.
Is there a reason why they've become more accurate?
Oh yeah, it's just continual tweaking of all the technology. So that this new technology, not to get too technical, it sends a cement sleeve down and it puts a pressure monitor on either side of the frack, so they can tell if the pressure monitor on the back side of the frack goes down, that means the well is still communicating. Communicating means that it's stealing some of the gas from the previous frack. So they've never been able to do that before. So just refinements in bringing materials in and out of the hole, costs, it's all just kind of come to this for now.
Well, then it is good news for the industry, keeping costs down.
Oh, it's great news for the industry. It's great news for everybody, because you're absolutely maximizing recovery out of that well.
Keith, thanks a lot for chatting with us.
Jim, God bless you. Thanks for the call. We'll talk next week.
My guest has been Keith Schaeffer, editor and publisher of the Oil and Gas Investments Bulletin, the website oilandgas-investments.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.